So let me glance you all to the chapter Advanced Tax, Tax Deduction at Source and Tax Collection at Source. So whatever income is earned in the previous year will be taxed in the assessment year. So for example, the previous year is 25-26. So whatever income is earned in 25-26 will be taxed in the year assessment year 26-27. However, it may be collected through TDS, TCS and advance tax. However, the tax may be required to be paid in the assessment year if the tax is liable to be deducted, but actually if it is not deducted, or the provisions of the tax deduction at source is not applicable, then in such cases whatever income tax is there, it will be paid in the assessment year itself. Now the first section is 192 on salary. Who is liable to deduct this TDS on salary? The employer is liable to deduct this tax on salary. For example, the employee has earned 1 lakh income. Now the TDS comes up to 10,000, for example. Now what the employer will do is he'll deduct that 10,000 and credit the remaining amount to the account of the employee. Now before deducting the TDS, the calculation of the TDS need to be made. So it involves selection of the regime. So either it is old tax regime or the default tax regime. The employee needs to inform the employer regarding the regime he wants to select. In absence of the intimation by the employee, it will be assumed that the tax is deducted. Tax will be deducted under the default tax regime. Now, after the intimation, now whatever losses are there, it will not be included in the calculation of the total income for the purpose of tax deduction at source. However, one particular loss will be taken, that is income from house property. If there is any loss under the head house property, then that loss will be taken for the calculation of the total income for the purpose of calculating the tax deduction at source. So now after calculating all these total income, now tax will be calculated at the rate which is applicable during the previous year. So after calculation of the tax, it will be deposited. So there is a concept of average tax. So average tax is total tax divided by total income will be average tax. So next section is interest on securities, that is section 193. Here every person who is liable to pay any amount to the resident will deduct the TDS. So if the amount is exceeding 10,000, then in such cases the TDS will be deducted. So now the rate of TDS is 10%. So there are certain exemptions, that is non-applicability in the TDS provision. So one is national development bonds, and if there is any tax saving bonds with the name tax saving bonds, any bonds with the name tax saving bonds, then in such cases you need to exclude that. Means TDS on 190 under section 193 will not be applicable, and if it is a 7-year MSc, then also it will not be applicable. And if there is any securities of LIC, GIC or any subsidiaries of GIC or any other insurer, then in such cases this section is not applicable. And specifically the 54 EC bonds, which is issued by the Power Finance Corporation Limited and Indian Railway Finance Corporation Limited, on this no tax will be deducted. Means whatever interest is earned on this, on that there will not be any tax applicable. On that no tax will be applicable. Now the next section is interest other than interest on securities under section 194A. So interest other than interest on securities includes the term deposits, FD, RD, etc. So now the amount here, the deductor here is any person other than individual or HUF, or individual or HUF who is liable to tax audit to any resident individual, then the tax is required to be deducted at the rate of 10%, exceeding certain specified limits which is mentioned. Let us go to the limits. Then now here the limit is 10,000 if in case the aggregate amount of interest exceeds 10,000, only then the tax will be deducted. However, this limit is 50,000 if the payer is banking company, cooperative societies engaged in the business of banking, and post office in case of certain securities. However, if the payee is senior citizen, then in such cases the limit is 1 lakh. Only if the limit exceeds 10,000, exceeds 50,000 and exceeds 1 lakh, only then the tax need to be deducted. Now, interest paid or credited by a firm to any one of its partners is exempt, and also cooperative societies other than cooperative banks are liable to deduct TDS if their total sales, gross receipts or turnover of the cooperative societies exceeds 50 crores during the financial year immediately preceding the financial year in which interest is credited or paid, and the limit exceeds 50,000 and 1 lakh. 1 lakh in case of a payee being non-senior citizen, and 50,000 in any other case. If such cooperative society is deducting the TDS, then it needs to deduct the TDS in respect of the interest credited or paid by it to its members or any other cooperative societies in respect of the deposits with the primary agricultural credit society or a primary credit society or a cooperative land mortgage bank or a cooperative land development bank, or in respect of the deposits with the cooperative bank or other than cooperative society or bank engaged in the business of banking. However, there are also certain exemptions, which is in respect of the following entities. That is, if for example, interest is paid by a banking company to any banking companies, then in such cases it is exempt. Then if banking company is crediting any interest in respect of LICs, so then in such cases this TDS provision under 194A is not applicable. Like that, there are certain points, that is, interest paid or credited to the following entities, that is, banking company, cooperative societies engaged in the business of banking, including cooperative land mortgage bank, then financial corporation established by or under the central state or provincial act, then Life Insurance Corporation of India, companies and cooperative societies carrying on the business of insurance, Unit Trust of India. So these are the certain exemptions. Suppose if there is any interest on the compensation amount which is paid by the Motor Accidents Claims Tribunal, then in such cases, on such interest, no tax needs to be deducted provided the aggregate amounts during the year does not exceed 50,000. That is, only if it exceeds 50,000, TDS needs to be deducted. Basically, the winning from online games, that is section 194B. In this section, the online gaming company will deduct the TDS at 30% on the net winnings in the user's account. So here the TDS is deducted on the withdrawal or in the balance in the user's account at the end of the financial year. So now, if there is net winnings, if it is wholly in kind or partly in cash and partly in kind, and if that amount is not sufficient to meet the TDS liability, then in such cases the online gaming company will release the net winnings only the uh, after the payment of such tax. So if the proof of such payment of tax is given, only then the net winnings shall be released. Next, the net winnings, if they are less than 100 in a month, then in such cases no tax need to be deducted. So suppose in any month, if the amount is exceeding 100, then in such cases you need to deduct the tax, even if the whole of the winnings at the end of the financial year may be at a loss. So if the loss continues later on after a particular month, then in such case no tax will be deducted. And for these amount which is exceeding 100, for which tax has been deducted, the person who is receiving the net winnings need to file the income tax further after the tax has been deducted at source. Now let me explain you with the example. So here is the example, that is, there is a total withdrawal minus the total deposit plus opening balance. So if the opening balance is 10,000, so deposit is 200, withdrawal is 15,000. So after adding the deposits and the opening balances, reducing it from the withdrawals, you get 4,800. On 4,800, 30% tax needs to be deducted. Payment to contractors and subcontractors, section 194C. This section is applicable only in case of resident contractors and subcontractors. If any payment made by the government institutions, it might be university, company, cooperative society, trust, and firm, or individual HUF, AOP, POI who is having gross receipts exceeding gross receipts or turnover exceeding 1 crore in case of business and 50 lakh in case of profession, then the this section will be applicable. Now the rate of TDS is 1% in case the contractor is or the subcontractor is individual or HUF. If the person is other than individual or HUF, it might be company or any other institution, and in such cases it is 2%. Contractor, if the in transport business, if they have furnished PAN, then nil. Subcontractor, if they have furnished PAN, then in such cases again it is nil. So if the individual payments are up to 30,000 in case of single payment, and 1 lakh if they feel the amount is going to exceed 1 lakh, then in such cases TDS need to be deducted. So here there are various payments which is made to the contractors, that is 20,000, 25,000, 28,000 and 30,000. Since in the final payment the amount is exceeding 1 lakh, that is 1,03,000. Now from the 30,000, whatever TDS is there, that needs to be deducted and then the payment needs to be made. Now since this payment is made to individual contractor, the rate is 1%, and 1% of entire 1,03,000 is 1,030. From 30,000, this 1,030 needs to be deducted and then the payment needs to be made. So work means it includes advertisement or broadcasting, carriage of the goods or passengers in any mode other than railways. Then catering also will be included, and manufacturing or supplying according to the specification of the customer. In this case, let me give you the example that the job contract in case of furniture is being manufactured. So the goods the whatever wood is there, that has been supplied by the customer. So since it is a job work, now the TDS applicability will come. However, if that whatever wood is there, it has been supplied by some other person, then in such cases it is a contract of sale. However, this will not be applicable in case of construction businesses. So in case of construction businesses, 194C is applicable. Now this section is not applicable in case of a person is into the business of buying, hiring or leasing goods carriages, and if he furnishes his PAN and also whatever goods carriages are there, if he owns less than or equal to 10 goods carriages, then in such cases this 194C section is not applicable. For example, if the transporter owns more than 10 goods carriages, for example, if he owns more than 10, that is 11 goods carriages, and he provides PAN, then in such cases what happens? The applicable rate will get applied, that is 1% or 2%, whatever the case may be. However, if the person is having less than or equal to 10 goods carriages and then he provides the PAN, then only there will not be TDS under the section 194C. However, he doesn't provide the PAN, then in such cases the applicable rates will be applied. This is applicable even if the contract value is greater than 1 lakh for transport operators who is having less than or equal to 10 whatever vehicles are there, then this is applicable. Even if it is exceeding 2 lakh, then also if they provide PAN as well as declaration, then in such cases no TDS need to be deducted. In crux, if I have to tell, if the transporter is owning less than or equal to 10 vehicles and provides PAN along with the declaration to the payer, then the TDS would not be deducted since he has provided the PAN, even though the amount is less than 1 lakh or less than 30,000. However, since if his owning of the vehicles is greater than 10, that is 11 for example, then in such cases the tax need to be deducted. Even though he has provided PAN, then also tax need to be deducted. And applicable limits, that is 1%, 2% and 1 lakh 30,000, whatever limit is there, that gets applied as it is, as in case of others. Got it? Next section is commission or brokerage, that is section 194H. This is applicable in case of other than individual or HUF, and in case of individual or HUF whose sales, turnover or gross receipts from the business or profession exceed 1 crore in case of business and 50 lakhs in case of profession. So the deductor who are these will deduct the TDS while making payment to the resident. However, the threshold limit of 20,000 is applicable. That is, only if it exceeds 20,000, then only the commission, that is the TDS on commission, gets applicable, and the rate is 2%. Another issue is payment by the client to advertising agency. So in this case, whether the TDS under section 194H is applicable. And second one is payment by advertising agency to television channel or news company. So here it has been clarified that in case of first payment, 194C is applicable, and in respect of second payment, there is no TDS under section 194C which has been applicable.